Welcome, dear traders. It's me, Kate Stichina, and you're watching a recap of the Asian session. The sentiment in the stock markets of Japan and Australia is usually influenced by Wall Street trading the day before. This is what we can see today as well. Overall, there were plenty of positive signals. Now, investors are anticipating the results of the Fed meeting. Watch our video review and find out about currency moves in the Asian session. Let's start. Wednesday has finally come. The Fed will announce its rate decision in the American session. It's widely expected to raise the key rate by 50 basis points. According to the Fed Watch tool, almost 80% of traders are betting on such a scenario. Optimism was bolstered by a softer-than-expected inflation report. This was the last crucial data before the Fed meeting. In November, the CPI slowed to 7.1%, fueling euphoria in the stock markets. The index has been steadily declining since June, when prices soared to an all-time high of 9.1%. Investors wonder whether inflation has finally perked. If so, the regulator may shift to a less hawkish stance after a long period of aggressive tightening. Although traders cheered a drop in inflation, market uncertainty did not subside. The rates of the Fed and other major central banks will remain high. It means that the economies of some countries may slide into recession. The US will also hardly be able to avoid it. Besides, market players still remember Jerome Powell's warning. He said that the rates would remain at restrictive levels until inflation returns to the 2% target. Therefore, traders will be mainly focused on Powell's speech at the press conference. Traders are cautious ahead of the meeting. They are also worried about China's economic prospects. The zero-COVID policy has crippled the economy. After the country had eased some virus restrictions, there was a new surge in cases. All these factors make investors extremely anxious. Fears intensified considerably when the Chinese authorities delayed a closely watched economic policy meeting due to problems with COVID. The higher the anxiety in the markets, the better it is for the US dollar as a safe haven currency. It has rallied many times this year amid such market conditions, and the greenback managed to consolidate at 104.10 during the Asian session, albeit with difficulty. It has already moved quite far from its former high versus the main rivals after a sharp drop overnight. Following the release of a softer-than-expected inflation report, the US dollar returned to a 6-month low of 103.57. Overall, it has shed 9% after declining from its 20-year peak in September. Traders have already factored in a 50 basis point rate hike, so the US dollar is lacking drivers for further growth. Nevertheless, in the Asian session, it recouped some of its early losses, moving in the narrow range of 103.90 and 104.10. Its further trajectory will highly depend on the Fed's rate decision. If the regulator hints at a less hawkish stance, the US dollar will decrease sharply. The ECB, the Bank of England and the Swiss National Bank are also expected to undertake smaller rate hikes. If this scenario comes true, the yen will greatly benefit from it. The rate gap between the Bank of Japan and other major central banks will narrow. In addition, the regulator signaled a possible shift to a more hawkish stance next year. The yen's movements will also be determined by the Fed's rate decision. In Japan, inflation expectations have jumped to a record high. Negative news from China has also limited the growth of the yen. However, its increase was facilitated by falling US Treasury yields. Government bonds snapped. They Three-day winning streak ahead of the Fed meeting. So the dollar-yen pair slid into the sideways channel of 135.20 and 135.70 on a Wednesday morning. It approached the level of 135.40. However, its main trend will become clearer in the American session. The Australian dollar rolled back to 0.6868 due to market caution ahead of the Fed meeting. Yesterday, it rose sharply following CPI data, but failed to climb to 0.69. As for the bullish factors, Wall Street is extending gains. There is also a high chance of a shift to a dovish stance. However, there are some negative factors as well, namely China's economic growth and the fall in oil prices. In the Asian session, the AUD-USD pair was hovering in the upward corridor between the resistance level of 0.6872 and the support level of 0.6822. And that's all for now. Please leave your comment down below, subscribe to our channel and keep your finger on the pulse. See you soon.